Hello guys, welcome back to BJ. Last week I did not drop any video because I was on holiday and I enjoyed it so much. I hope you enjoyed your holiday. I hope you had fun with your friends, with your family, and with your loved ones. So, welcome back to a new video. Yeah, in the last video, we talked about the key performance indicators and we explained how you can use them to improve your business or your product. And of course, you have to define these key performance indicators in order to track the progress and the growth of your product and how well you are meeting both your short-term or your long-term goals. Today, we want to talk about accounting and we want to talk about some key elements of income statement. So what is income statement? Well, income statement is also called profit and loss account or profit and loss statements. And what it shows you the money you generate from running your business, and also it shows the money you incurred in the process of running your business. So the first element of income statement is the revenue. Don't forget, we said revenue is one of the key performance indicators of many businesses because you want to generate money. So what is revenue? Revenue is simply the total amount of money you made by selling your product, and it is calculated by multiplying the unit of the product you sold by the price. Let's say you sold 100 units of your product and your price is $10. Then your revenue for that period of time is $1,000. So if you want to increase your revenue, this is how you increase your price, which you have to take into account some things like customers' willingness to pay, like we said in the previous video. Or you can reach more customers, which means that you increase the units sold. Either ways, you will increase your revenue. The second element is the cost of goods sold. And the cost of goods sold, it simply means the expense you incurred in the process of making a particular product. So this is a direct expense, or the direct expenses that can be traced to a particular product. So they are cost of goods sold. You can talk about things like direct labor costs, direct material costs, or the part of your manufacturing overhead that can be traced to this particular product. That is the cost of goods sold. And if you minus this cost of goods sold from your revenue, then you have your gross profit. But don't forget that in running your organizations, you also incur some expenses, right? Like your administrative expenses, advertising expenses, sales expenses, distribution, utilities, employees, and this cannot be traced sometimes to a particular product. So this is like general operating expenses. So you have to deduct this from your gross profit. And after you deduct this from your gross profit, you will get the operating income. So after you get your operating income, you also want to think of, there are other ways you also generate income as an organization. For example, if you save your money, you have interest on the money, right? That is an income. If you borrow people money and then they pay you the interest, that is also an income. Or you also use your platform to advertise some product and you get commission for this, that is also an income. Or you also do a kind of service alongside your major operation, and then you charge people for your service, that is also an income. Or you invested in another organization and then you're a shareholder in another organization and you get dividend from these people, that is also an income. Or other investments you made somewhere, that is also an income. So you want to add this income to your operating income. But don't forget also there are other expenses you also incur that is not directly, related to your business operations. So these are also called other expenses. So you also have to remove these other expenses. And after you add this income and remove these other expenses, you will get your profit before tax. Some people call it earning before tax, EBT or PBT, depending on how you want to call it. So it means that before you actually remove your tax that you are paying to the government, you have a particular profit, which is profit before tax. So, and after you pay your tax to the government, you now have your net income, which is the remaining money that you actually have after you have deducted everything you want to deduct, from expenses to tax to everything. And this is what you probably want to share among your shareholders, or you want to keep for the organization. I don't know, whatever you want to do with your net income, but your net income is the money that you actually have after you remove all your expenses. So let's go through it again. Revenue, cost of goods sold, we remove it. So then we have our gross profit. Then we remove the expenses of running the entire business, which are called operating expenses. And then we have our operating income. And then we add income from other sources, right? Like investing, like commissions and all. But then we also remove other expenses from other sources. And after that, we have our earning before tax, or profit before tax. And when we pay our tax to the government, then we have our net income. So that is what income statement is all about. I know this is difficult for most people, but it's one of the things that you need to know as an entrepreneur, because understanding financial accounting and other accounting and all those income statement, balance sheet and cash flow statement, all those kind of things is very, very important for you in order to be successful, and in order to know how money is flowing out of your organization and how money is flowing into your organization. I will make other videos to explain things like the cash flow statement, things like the balance sheet and other financial accounting concepts that you may need to know as an entrepreneur. I hope you got value from this video today, but please don't forget to subscribe to my channel. Don't forget to like the video, and don't forget to share the video with your friends. Thank you, and I will see you in the next video.